Hello, this is Julius from Basic Financials. I'm going to do a video today on tax codes. I have done a video on this before, but I just wanted to revisit it with some more specific examples of what might be in your tax code. It's just from something I've been doing recently. Makes it obvious that there are so many things that can go a bit haywire in your tax code if you're not too sure what's going on. And this can particularly apply if you're preparing a tax return and you're starting to look in your tax code to see things that are in there. Now, normally with your tax code, I'm talking about the year ended 5th of April 2021. So your personal allowance, this could also be for year ended 5th of April 2020 because the personal allowance was the same. But to start with, the personal allowance is 12,500. So your tax code would start with 12,500. Now, off that, you might have, for example, if you get a state pension or some other pension, normally state pension, because normally other pensions would have tax deducted, but a state pension doesn't have tax deducted. So if you're in the receipt of a state pension, so let's say you get £8,000 state pension. That £8,000 would be taken off your tax code. So you end up then with a tax code at the moment of 12,500 minus 8,000, so you've got 4,500 left. Now, if that was left at that, your tax code would be 450L, which basically means 4,500. And what would happen is your employer, say you're getting a state pension and you're also employed, your employer would use that tax code and tax your income. So that's, in that way, your state pension is effectively getting taxed because they've taken it off your allowance and therefore you pay more tax on your employment. Now, the other things that could be in your tax code, if for 1 year you had an underpayment, let's say you underpaid tax by £20 for 1 year. You might receive a tax calculation from HMRC. Let's say for the year end 5th of April 2019, they sent you a tax calculation which said you've underpaid tax for £20 by £20 for the year. And then what they would then normally say is we're going to collect this tax by adjusting your tax code. Now, they don't normally adjust the tax code for the next tax year. It sort of leapfrogs to the following year after that. So if it was 2018-19, year ended 5th of April 2019, they would adjust your tax code for the year ended 5th of April 2021. You would see an adjustment in there. Now, if you're a 20% taxpayer, basic rate taxpayer, what they would do in your tax code, they would take £100 off your tax code in order to collect an extra £20 tax. Now, that's great, but if you do a tax return, say you're filling out a tax return for the year end of 5th of April 21, you will come to a part near the end which says tax underpaid for previous years included in your tax code. You would need to put in the £20 in that box. Now, often it's already filled in. And if you see something in there and you're doing a tax return, that will be why. And it should be shown on your tax code and it relates to an underpayment from previous years. There is also a box on your tax return which says if you don't want them to do that, if you've got an underpayment, if you're doing a tax return and you've got an underpayment, they will collect it through your tax code if you don't tick the box to say you'd rather pay. So you can tick the box to say, you tick the box to have it actually collected, but you can untick the box to say that you want to pay it. Now, the other things that can be in your tax code, they might estimate that you've got some income in the tax year that you will need to pay tax on. For example, you get a savings allowance so if you have interest on savings, taxable interest, and not ISAs, but taxable interest, of more than £1,000 and you're a basic rate taxpayer. If you're a higher rate taxpayer, that allowance is £500. But so let's say you're a basic rate taxpayer. If you had savings interest of £1,200 in the previous year, they would assume that you're going to have the same in the next year. And they would say, well, 200 of that is taxable. And they would say, well, you owe tax at 20% on £200. So in order to collect that, they might adjust your tax code by £200. So you'll see in your tax code adjustment for tax you owe during the year. And then there'll be a note somewhere which says, we think you're going to get taxable interest of £200, and they'll take £200 off your tax code. So that's just a few things that might be in your tax code. There are other things as well, a whole bunch of things. You might have a blind person's allowance, which might go on, which is £2,500, so that would get added onto your tax code. You might have your partner might transfer some of their allowance to you if they don't use it all. That would be £1,250 added on. You might have benefits in kind that your employer provides to you, like car benefit or medical benefit. And car benefit can be quite high. Medical benefit, let's say you get £1,200 worth of medical benefit, that would come off your tax code. And each year they estimate it based on what happened in the previous year. So you need to keep an eye on that tax code. If you don't think it's right, you can either try and adjust it through your personal tax account, which isn't always easy, or you can phone up HMRC and explain to them what the situation is and say how you want it to be adjusted. And if you've got all the information, they'll do what you ask them to do, basically. I think that's probably enough for now. As I have done a video on tax codes before, but that's just a little bit more detail on some of the things you might find in it. I hope that helps. If you've got any questions, please leave them in the box below, and like and subscribe as usual, please. And I'll see you again for another video soon.